Hello and good morning. You're watching Market Cafe on ET Now with me, Snehisha, and with me is Shreyansi Singh. Shreyansi, wishing you a very good morning. And well, it's a start of a fresh new week for us. And let's take a look at what the markets have done globally while we were, asleep and we were off for the weekend. Let's take a look at what happened on Friday. What futures are indicating open for the US markets, at least for today morning. And we'll start the show with exactly that, the global handover. And Shreyansi, take us through what's happening in the US, because last week big losses coming in, but at least right now the futures are looking good.
Absolutely. Well, yes, when you look at the futures, you do have the gains coming in. When you look at S&P 500, you're looking at gains of 0.3%. Nasdaq as well had a gain of 0.4% coming in, and Dow Jones futures as well added about 97 odd points, 0.3% thereabout. Now, when you look at S&P 500 and Nasdaq, both of them fell 3% and 5.5% last week and are on their 6-day losing streaks as well. Now, when you look at Nasdaq, then that fell 2% on Friday alone, with chip giant NVIDIA sinking 10%. The Dow, which has less tech exposure than the other two benchmark averages, was changed on the week, and the struggles for equities come as recent inflation readings have diminished hopes that the Federal Reserve will cut rates 7 times in 2024. Now, corporate earnings could also be a factor in coming days, with names like Tesla, Meta Platforms, American Airlines, Microsoft and Alphabet all set to report in the week ahead. So that actually is the handover coming in from the US markets, Nehi. But how are you looking at crude prices then? Because oil has had quite the week, right?
Well, oil has had quite the week, but you know what's interesting to look is also the European markets, because amid all the volatility that we did see coming in last week for the US markets, Europe somehow managed to hold its footing. FTSE also closed up almost 0.3% on Friday. Stock 600 was rather flat with a negative, but not much to worry about when it comes there. Let's shift focus. Let's talk about what's happening in the world of oil. And oil futures posted a loss for the last week as traders see limited risk that Israel's retaliatory strike on Iran will trigger a wider war that disrupts crude supplies. Now, US crude oil and global benchmark Brent have fallen 3% and 3.4% respectively since Friday, erasing gains made when investors bid up prices on fears that Israel and Iran were on the brink of a major war. Remember when we went breaking this news on Friday that there was a sentiment of war building up in Iran? Both of these indices, Brent as well as WTI crude, spiked up 3.5% in the moment itself. So, well, a correction was due in my opinion when it comes to the oil market. But market sentiment has now also shifted from fear to relief this week after Israel and its US-led allies thwarted Iran's unprecedented drone and missile attack on Israel last weekend. The Netanyahu government appears to have submitted to international pressure to avoid escalation, waiting days to retaliate and ultimately launching a very limited strike against the Islamic Republic on Friday. Experts are saying that this seems to have been an indication that the war may have cooled down now, but that only time will tell. Now, WTI futures settled 0.5% higher at $83.1 a barrel on Friday, while Brent gained 0.2% to settle at $7.3 a barrel as well. The two contracts have largely erased the risk premium built into prices after Israel hit an Iranian diplomatic building in Syria at the start of the month. That event that triggered the current round of hostilities as well. But all of that right now, that sentiment has calmed down a little bit, and that is reflected in the cool down of the oil prices as well. Moving on, let's also talk about gold, right? Because gold has also been a commodity that has been largely in focus on the back of everything that has been happening globally as well in terms of geopolitical pressures coming in. Remember, gold as an asset is usually considered to be a safe haven when it comes to all of these events. And gold is on track for a weekly rise as Middle East risk still looms. The sentiment seems to have cooled off around the war right now, but well, everybody is watching gold on their radar. As of now, gold is trading down 0.1% with a cut as of now at $2,393.8 per. This is the spot gold rate. So per ounce when it comes to gold. But well, yes, this is largely the handover coming in for gold as well as oil gems.
Absolutely, and there's a lot to cover on the show, but let's kickstart with the events that we should be looking out for. And from India, you do have on the April 23rd, you do have the HSBC Global Manufacturing PMI as well as Nifty expiry. And then on to US, then you do have manufacturing PMI as well as GDP wholesale inventories and jobless claims data coming in from the US. From the UK, then you have composite and manufacturing services PMI data coming. From the Eurozone, you do have consumer confidence and manufacturing and services PMI data as well. Now from China, you do have loan prime rates April 22nd, so keep an eye on that data set as well. On to earnings then, on April 20th, you did have Nifty, HDFC, from the Nifty you did have HDFC Bank, and on April 23rd then, from the Nifty you do have Tata Consumer, you have LTI Mindtree, and the next day HUL Axis Bank as well. And this week we also have Tech Mahindra, Bajaj Finance, Nestle and IndusInd Bank reporting their numbers. So keep an eye on those earnings as well. Now this week we also have Anup Engineering that has an execution of a bonus rights issue in the ratio of 1:9. So keep an eye on that as well. And then again, on the primary market front, you do have a lot of IPOs. You have on the April 22nd, you have Vodafone Vodafone FPO that closes, K&K India IPO that opens this week. So keep an eye on that as well.
Well, absolutely, and let's not forget today, big boy Reliance will be coming out with its Q4 as well as FY24 numbers post-market hours. So everybody will be watching that also with a very keen eye. But let's get a move on. Let's kickstart the show with our global stories then. And US House of Representatives has passed a long-standing bill of $95 billion aid to Ukraine, Taiwan and Israel. The bill saw a broad bipartisan support and could be signed into law as early as next week. Meanwhile, nearly $61 billion package has been earmarked for Ukraine's war effort against the Russian invasion.
And after price cuts in the US, EV tech giant Tesla has now slashed prices by nearly $2,000 across its models in China. This comes amid its falling sales and an intensifying price war in the EV space. They've also cut the starting price of the revamped Model 3 in China by 14,000 yuan. Tesla also made similar cuts to the Model Y starting price as well.
And in other news then, tech giant Apple is set to scale up production in India via vendors and is expected to employ around 5 lakh employees from the whole country in the next 3 years. The fresh plans of hiring will be a significant boost from the current level of 1.5 lakh employees that Apple has in India.
Alright, time for a quick break then, but when we come back, we'll take a look at how the Asian market is faring as well.
Hi there, welcome back to Market Cafe on ET. Now let's take a look at how Asia is faring as of how they seem to have rebounded from Friday's sell-off as investors look to fresh data points out of China, Japan and South Korea this week. Lots of macroeconomic indicators coming out of at least these regions over the course of this week. Not just today, China's 1-year and 5-year loan prime rates have been left unchanged at 3.45% and 3.95% respectively. 5-year LPR, remember these loan prime rates act as the peg for most property mortgages when it comes to China. So let's take a look at what's happening when it comes to those markets. Hong Kong's Hang Seng index topped 1.7% and Hang Seng also at 1.4% right now, doing pretty well for itself. In fact, 232 point coming in over there as well. And Shanghai trading as that is possible with a slight positive bias. Let's see if Shanghai is able to build those gains over the course of the day. Shifting focus, let's talk about what's happening in Japan. And markets also, Nikkei went up 0.5% on open. It's right then going March up almost 0.2% or 92 point uptick coming in for Nikkei as we speak. Korea, then South Korea's Kospi also opened in the green 0.1%. It's exactly there right now at 2614 where Kospi is, and well, that's what's happening with Korea as well. Lastly, let's also talk about what's happening with Australia, also in green, and a solid move coming in over there as well. Almost 1% in the green is where Australia is. All of these markets are trading with gains as of now. Shanghai rather flat, but positive bias nonetheless, and good moves coming in from Asia, at least as of now. And we can expect to have a good start today because we shot up on Friday at 22,147, implied at 22,239, 110 point uptick indicated when it comes to spot as well. So good moves indicated for us today, at least compared to how the market opened on Friday. It seems like a much better open for us. Hi there, welcome back, and thanks so much for staying tuned to Market Cafe. Let's get a move on and then let's talk about some interesting stories. And the big event over the course of the weekend was supposed to be Elon Musk's visit to India, but that has now been postponed. That much awaited trip to India has been postponed, but he says that he looks forward visiting India later this year. Let's go across to Sumit Chaturvedi to get all the details as to why his trip has to be postponed and what's next when it comes to Elon Musk to India. Sumit, take it away.
Well, in the latest, Elon Musk, the Tesla CEO and billionaire, is not coming to India. As reported earlier, he was scheduled to come on April 21st and 22nd, but he is not coming. He has tweeted saying that because of Tesla's busy schedule, things happening there, he is not coming to India. The visit can be later this year. Overall, Tesla's entry was very much looking forward to event. Tesla's India plans were very much on the table. Earlier, also reports said $2 to $3 billion of investment Tesla could announce for India. They were already scouting for retail space for Indian market, but now it looks like it is delayed for some time. However, sources say that Elon Musk's not coming to India won't impact Tesla's plan. They are going as usual. Remember, India has already kicked off elections, and that is an exercise that's going on. However, that's notwithstanding, Elon Musk has tweeted saying that he is not coming to India. One of the reasons could be his busyness with April 23rd upcoming board meeting, when his salary structure will be taken up. Also, issue of the employees, 10,000 employees fired recently would be taken up. Keeping all that in mind, it doesn't look like Elon Musk could take out for a visit, and that's what he has tweeted, that he is not coming to India now. His visit has got delayed.
All right, thanks Sumit for that roundup. Moving on then, PNGRB has reviewed high-pressure grid tariffs and cut the tariff by 47%. What will it imply for GSPL? Swami is standing by with a detailed analysis. Swami, good morning. Take it away.
Well, it's a big announcement coming in for GSPL. PNGRB has reviewed high-pressure pipeline tariffs for GSPL, and the rates have been cut by nearly 47% compared to what it was earlier. The current rate will be 18.1 rupees per MMBTU, and this will be effective from the 1st of May. Now, the earlier rates were around 34 rupees per MMBTU, which means a cut of 47%. But do remember, GSPL in its revision petition has filed for a rate of nearly 50.77 rupees. So, compared from, if you see, the tariff rates are nearly 64% lower compared to what GSPL had asked for. Now, why this lower tariffs have been given by PNGR? Because they are expecting lower future capital expenditure of around 1800 crore rupees against 3400 crore rupees claimed by GSPL. They are also expecting lower future operation cost when it comes to their existing pipelines going forward. And the most important point here is that they are expecting high utilization levels of around 87% as against 75% claimed by GSPL. Now, because of this high utilization levels, the key disagreement between PNGRB and GSPL has come in on the volume expectations. Now, PNGRB is expecting volumes of around 31.7 MMSCMD over FY25 to 32, while GSPL's expectation was around 26 MMSCMD. Now, because of this volume difference, the prices have been cut by 64% as compared to GSPL's expectation and nearly 47% as compared to the earlier rates. Now, PNGRB has also stated that they will review this rates in the next financial year if there is a considerable difference between the actual volumes and the considered volumes by PNGRB. Now, because of this cut in tariffs, the company's earnings are expected to come down at 30% over FY25 and FY26, and because of this, most of the analysts have actually cut their target price on GSPL and their ratings as well. Equirus, ICICI Securities, Kotak Securities and MK, in fact, Systematics have also reduced or downgraded their rating on GAIL. The average target price cuts have been anywhere between 11% to 26% on GSPL. So keep an eye out for GSPL in trade.
Absolutely. We'll be watching out for GSPL. But while you're with us over here this morning, also take us through another stock that is going to be in focus today, and that's going to be Aditya Birla Fashion Retail. Now, this is on the back of their Madura demerger. They've come out with some new interesting details about the same. So take us through that as well.
Well, Aditya Birla Fashion had earlier announced that they will be demerging the Madura Fashion and lifestyle business into a separate entity, which will also be listed on the exchanges. New details that have come in, firstly, is the name of this new entity will be Aditya Birla Lifestyle Brands Limited, and this will be listed on the exchanges. The shareholding will be identical to Aditya Birla Fashion Retail. Now, company earlier mentioned that the Aditya Birla Fashion would look to raise funds over the next 12 months, and promoter participation will also be there in that. But I mentioned the amount that they are looking to raise, and that is around 2,500 crore rupees currently. Now, when it comes to the debt of Aditya Birla Fashion, it stood at around 3,000 crore rupees as of FY24, and how this debt is now going to be divided into both these entities, that is a new detail that has come in. The new entity is expected to have a debt of around 1,000 odd crore rupees, while the balance 2,000 crore rupees will remain with Birla Fashion Limited, which is the existing entity. Now, the company will also hold a conference call today at 3:30 p.m. And to give in more details for analysts, so keep an eye out for that stock. Now, why the company had chosen this demerger, value unlocking to boost the stagnant valuations and also to create a simplified structure for future. Hence, they had gone ahead with this merger announcement, and more details are expected to come in analyst call today at 3:30 p.m.
All right, thanks Amit for that round. Keep an eye on Aditya Birla Fashion as well as that analyst meet as well. Moving on then, it was a decent set of numbers for Wipro for the quarter gone by. The profit and margin managed to beat street expectations while revenue was in line with estimates. Let's also go across to Anisha to do all the number crunching. Anisha?
Well, it was a decent quarter from Wipro this time around, actually in line with expectation to actually slightly better on the operating basis, because the dollar revenue was in line with expectation at $2,650 million thereabout. The rupee revenue was also broadly in line, around 22,080 crore rupees coming in, a little below the expectation. Margins, however, were better. The margin performance came in at 16.5% versus our expectation of 16%, and that's why the profitability is also looking healthy. The other good news coming in is, of course, the kind of growth that the company has delivered in terms of the bookings as well. Because if you look at the overall booking number that has come in this quarter, it's $3.6 billion, largely in line with what we have seen in terms of the average as well. The attrition has come off a bit. Yes, on a quarter-on-quarter basis, there is a dip in headcount, but that's something that we have seen across the board with all the IT companies, so this is not very surprising. The constant currency decline this quarter was around 0.3% versus our expectation of a decline of 0.4%, broadly in line with expectations. What's actually important to note is the kind of commentary coming in for the coming quarter, and there the company is guided for a downside of 1.5% to a growth of around 0.5%. Street was factoring in -1 to +1 kind of performance, so smidge below that. But given the fact that the performance from the rest of the IT has been weak and the commentary hasn't really elevated yet, maybe this is something that the street will take well, and that's why they're talking about revenue of around 2.6 billion to 2.67 billion in the coming quarters. So that's something to watch out for. So decent set coming in, given the environment and the performance of the peers.
All right, Anisha, thanks for taking us through that decent set coming in. See how the stock performs in today's trading session. But let's go across and listen into what the new CEO at Wipro had to say about their growth. Listen in.
We have the building blocks and the platform for us to work on. We called out the priorities that we have, and we're going to stay focused on large clients, our partners, and of course the verticals that we want to go after. We also want to make sure we bring in the right business solutions which are consulting-led and AI infused. With that in the context, I think next 2 quarters the focus will be on what's the right solution and approach for our respective clients in those respective industries. The prediction from a broader context macro environment is the second half is going to be better than the first half, and hopefully when the second half gets better than first half, we are ready there with our approach and our context for the client.
All right, then that's what management had to say. Moving on, let's also take a look at what the brokerages had to say about Wipro then. And Citi and Goldman Sachs came out with their notes. They maintained sell, both of them. And in terms of the target, they're keeping the target at 430 rupees for Wipro. Let's take a closer look at what Citi had to say. Citi said that this was an inline Q4. They said that there was weak Q1 guidance coming in from Wipro. And what they've also done is they've lowered the EPS estimates by 2%, and they now expect FY25 constant currency revenue growth to be flat on a year-on-year basis. And that's the word coming in from Citi then. Moving on to what Goldman Sachs also had to say. They say that the revenue outlook is still muted or uncertain, and that's the word coming in from Goldman Sachs. They're also saying that Q4 margins are a positive surprise though. And what they're also saying about the revenue estimate is that they're lowering it to 1.9% year-on-year growth in financial year 25. They also expect near-term underperformance on revenue growth, so that's coming in from Goldman Sachs as well.
All right, that's on Wipro. Let's get to move on and talk about yet another Nifty 50 company that came out with its numbers over the course of the weekend, and that's India's biggest private lender, HDFC Bank. Now, this bank has announced broadly in line March quarter results with credit costs and stable margins. Let's bring on board Gaurav to break down all these numbers for us. Gaurav, take it away.
Well, yes. HDFC Bank reported its 4Q numbers, and if we look at the numbers quickly, net income was up almost 2% on a quarter-on-quarter basis. PPOP now stands at 1,200 crore levels, which is now up 23.8% quarter-on-quarter basis. And during this quarter, we saw HDFC Bank sold its stake in NVIDIA, which actually resulted into a gain of 7,300 crore rupees. And if we look at the after-tax impact, it reported a gain of 5,500 crore rupees from Credila's stake sale. At the same time, HDFC Bank also made provisional floating provision of 10,900 crore rupees, and because of this, we saw the PAT increase was only at 1%, and now it stands at around 16,500 rupees levels. Apart from that, if you look at the asset quality, it remains stable. Gross NPAs and net NPAs remain stable. In fact, the credit cost actually improved to 0.42% versus what it was at 0.7%. And if you look at the street, they were also expecting this to remain at around 0.5%. Talking about net interest margin, that also improved actually to 3.44% levels versus what it was at 3.4%. And the street was also expecting bank to report net interest margins a little lower than the previous quarter. Lastly, on the back of the strong numbers, if you look at the consensus estimates, PAT was actually a little missed because of the floating provision that was made. But if you look at net interest income and PPOP, that was actually in line with the analyst expectation. So all in all, commentary will be a key to watch out for HDFC Bank, but inline set of numbers, or I can say positive set of numbers coming up from HDFC Bank for 4Q FY24.
All right, thanks Gaurav for that roundup. Let's also listen into what the CEO Srinivasan Vaidyanathan had to say about driving deposits and what will keep the margins stable as well.
Our focus is on the fundamentals, right? That's how stepping up and enhancing customer engagement, keep them engaged, and that's what gets those deposits. And it's not that we have anything, it's the customer behavior that drives those deposits. And those fundamentals are intact, and that's what operates. And when the market opportunity presents itself, like it presented in this quarter, you see those balances. There are some seasonality. We are competitively positioned in the market, and we are not leading with price to bring anything. So that's something to keep in mind. So it depends on how the market interest rate moves on the deposit side. On the yield side, we are not endeavoring to give loans at a rate. The objective there on the lending side is that the right quality of origination at the price point that we like. That's where we approach. Depending on the mix of products, that's what determines the margin ultimately, because we price the cost of funds into the yield. And so to the extent that the mix of the products remains stable, you see that the margin is stable.
All right, that's coming in from the management of HDFC Bank, but Tata Group is reportedly in the final stages of negotiations with Pegatron to acquire a majority stake in the electronics manufacturer's India operations. Now, according to reports, the deal could materialize as soon as May this year, and post the completion of the transaction, Tata Group will run Pegatron's operations in India, while the Taiwanese major will likely help the company with manufacturing expertise of Apple handset assembly operations in India as well. They include an iPhone production plant near Chennai in India's southern state of Tamil Nadu and another one under construction. The potential agreement comes as Apple is accelerating its efforts to boost output in India, aided by financial incentives offered by the government of the Prime Minister Narendra Modi, while diversifying its supply chain away from China to mitigate geopolitical risks.
All right, let's keep it going with the Tata Group, but moving on to an ET exclusive, where we learned from sources that Tata Sons have submitted a proposal with the RBI to get a waiver on the IPO. Ankur Mishra is standing by with more details. Ankur, what sort of an exemption is Tata Sons looking at, and why then?
Yes, Tata Sons has started the process of getting a waiver on its listing part. We understand through sources that a formal proposal has been submitted to Reserve Bank of India for getting an exemption in listing. We understand that the proposal contains a glide path to reduce the debt in the company. Remember, in the recent offering of its shares in TCS, Tata Sons has garnered 9,000 crore, and that will be used for repaying the debt. We also understand a similar kind of glide path has been given in the proposal which has been submitted to Reserve Bank of India. So also indicate that any formal indication from Reserve Bank of India is yet to be received. No formal reply has been received from Reserve Bank of India on that front, and company will await direction from the regulator on the proposal which has been submitted. Remember, as per the guidelines of the regulator, as the company in the upper layer NBFC, it needs to list by September 2025. Although there is still time for meeting those obligations, the company is preparing itself to check from the regulator whether or not it can take such kind of an exemption.
All right, very interesting details coming there, Ankur. Thanks for taking us through that. With that, viewers, we'll slip into a very short break, but we'll keep going with more stock-specific news and updates right on the other side of this break. So you stay tuned.
Welcome back. Thank you so much for staying tuned in. Well, big boy Reliance is all set to report its Q4 earnings. Somi standing by with a roundup of what the street is penciling in. Somi?
Well, in the fourth quarter, if you see Reliance Industries is expected to report a strong set of numbers. Revenues are expected to be higher by around 4%. EBITDA is expected to jump by nearly 4.5% on a sequential basis. Margins are expected to come in at close to 18.1%, while the net profit is expected to be higher by around 5 to 6 odd % on a sequential basis. Now, the company is expected to report its highest quarterly EBITDA number on the back of growth that will be in the oil to chemical segment and also because of the telecom segment. Now, segment-wise, you see the oil to chemical segment EBITDA is expected to be higher 13% on a sequential basis, and this recovery is owing to higher refining margins, higher throughput and better petrochemical spreads. Now, throughput is higher because in the previous quarter, that is the third quarter, there was a planned maintenance shutdown, and hence we are seeing such kind of a move when it comes to the oil to chemical segment. When it comes to the retail segment, revenues are expected to be higher by around 1.5% on the back of store expansion and higher footfalls. However, the retail segment EBITDA is expected to come down marginally by around 1 odd % on a sequential basis, but this is largely because we are also coming off from a seasonally strong quarter, the festive season quarter of Q3, and hence we are seeing some kind of a dip when it comes to the EBITDA number. Now, the oil and gas exploration business, there the EBITDA is expected to decline 3 odd % on a sequential basis, and that is because of the rise in profit sharing with the government gas. Because of the rise in profit sharing, the EBITDA is expected to come down. On the other side, if you see the output number and the gas prices are largely expected to be flattish on a sequential basis.
Well, all right. Eyes will be on Reliance today, but Somit, while you're with us, also tell us what to expect from Reliance Jio. Now, solid addition is expected to be seen in the subscriber base.
Well, for Reliance Jio, that is the telecom arm of Reliance Industries, revenues are expected to be higher by 2.5%. EBITDA is also expected to see similar kind of jump. Margins are expected to be flat. Net profit is expected to be higher by around 2 odd %. ARPU number, that is a key number for telecom companies, that is expected to be flat on a sequential basis at close to 1.8 rupees per user per month. But it's the subscriber number that will create the growth for Reliance Jio in the fourth quarter also. Subscriber numbers are expected to be around 48.1 crore as against 47.1 crore that we had seen in the previous quarter. Now, this will be the 8th consecutive quarter. Reliance Jio is expected to report a subscriber growth on a sequential basis. However, net subscriber addition that we'll see in the fourth quarter would be marginally lower than what we had seen in the previous quarter, that is the third quarter. Now, ARPUs are because despite the rising FTTH contribution, that is the broadband contribution, there is one less number of day on a sequential basis, and hence ARPU is expected to be flattish on a sequential basis. Now, apart from these numbers, what are the things to watch out for from management commentary would be their outlook when it comes to the refining and petrochemical business. What is the roadmap for the new energy business? When expecting a tariff hike to come in? How has been the performance of Jio Bharat for Reliance Industries, and what is the commentary when it comes to the capex outlay of FY25 would be key to watch from Reliance Industries earnings.
All right, thanks Amit for taking us through that. Let's keep it with this group going ahead, and let's talk about Geo Financial, and let's take a look at what their quarter four numbers are looking like. Total revenue has come in flattish at 418 crore rupees. Essentially, net profit is up 6% at 311 crores on a sequential basis as well. Loan book is also still slightly small at 173 crore rupees. Let's break down these numbers, talk about the different verticals. From the lending business, the company has shifted focus towards secure lending, and they've launched supply chain vendor financing business in quarter four as well. Home loans, LAP and loans against mutual funds are in the pipeline, and they'll be launched shortly. From the payments bank vertical, they've launched a virtual debit card under the Geo Payments Bank, and they've launched a merchant app during the quarter as well, also piloting a sound box. From the insurance partnership branch, then they've offered policies of 29 partners versus 27 in the last quarter. So there's an addition of 2 partners in the quarter gone by. The focus is on leveraging Geo Payments Bank's merchant offering as well, and they've launched an embedded insurance with Whitecoat recently as well. Let's also take a look at what's happening on the investment front. They're looking at top level high for the AMC JV. Remember, they've gone ahead and done a 50-50 joint venture with BlackRock for their AMC business. This is in progress, and infra and tech platform is also in implementation. So well, that's largely the snapshot when it comes to the number of Geo Financial.
All right, then let's move on and let's go across to Ansh, who's standing by with the futures and options roundup. Ansh?
Right, so let's start with Nifty first. Despite Nifty closing in red in the previous week, we saw up move in the previous session. It gave a up move of around 300 points of days low, taking support at around that 21,850-800 level, which we had been mentioning from last few sessions as well. Whereas in index futures, we're seeing open interest declining by around 10%, indicating short covering, which is again a positive sign. Whereas on option front, we are seeing some call buying happening at 22,250 strike, indicating option traders expecting Nifty to go above this and close above this level. Moving on to Nifty Bank, as you can see in the chart as well, the index has given a good bounce from its support, which we had been mentioning from last 6 to 7 sessions, and it faced a strong support at around 100 DMA as well, which is also at a support of around 46,900 level only. Whereas in future, we are seeing open interest declining by around 12%, indicating covering, again a positive sign. Whereas on option front, we are seeing call covering happening at 47,800, indicating some profit booking around that level. Whereas on downside, we are seeing strong put writing happening at the psychological level of 47,000, indicating strong support base around this level. Now, the most important was HDFC Bank, which actually led the rally in both Nifty and Nifty Bank in the previous session. It contributed around 60 points in Nifty's up move and around more 300 points in Nifty Bank's up move. Also, if you see the chart, the HDFC has actually formed a bullish engulfing candlestick pattern, which usually indicates potential reversal in trend on upside. Also, it has a very strong support at 1480. So as long as this is protected, we can see a continuity of positivity in the stock. Let's also see what FIs did in the previous session. So they added around 24,600 contracts on upside, but they also added short by around 20,100. So net to net, we are seeing addition of around 4,400 contracts, which the total long has inched a bit higher from 32.5% to 35.3%. But the total short is at around 2.27 lakh contract. This is the highest in at least 3 years, but excessive pessimism is also positive. So if there is any short covering, we may see short squeeze in the market, which can give a spike in the market on side. Lastly, let's have a quick view on F&O stocks as well. That will be in focus. We are seeing short build-up happening in Bajaj Auto, amidst Financials and TVS Motors. So keep an eye on the stocks.
All right, well, Ansh, thanks so much for taking us through that. With that, let's also take a look at all the stocks that will be in focus in today's trading session. Let's start by looking at all the earnings candidates. And over the course of the weekend, we had numbers coming in from IREDA. The consolidated numbers year-on-year basis. Net interest income has come in at 41 crores, a spike of 35%. Profitability also at 337 crores. So that stock will be in focus. A rather poor set of numbers coming in from HDFC AMC, because when you look at their revenue, that is up only 3.6% on a sequential basis, and net profit also up almost 11% for the same period. Moving on, let's also talk about Bhansali Engineering. Revenue has come in at 321 crores. That's a downtick of 2% coming in on a year-on-year basis, and net profit is also at 40.4 crores versus 40 crores. So, well, that's a large spike coming in over there for Bhansali Engineering. The net profit figure is up a whole of 184% on a year-on-year basis. Big spike coming in over there as well. Moving on, let's talk about Sterling and Wilson. Revenue is up quite a lot. It's multiplied manifold, because it's up from 88 crore to 1,178 crore. That's a rather big jump coming in the revenue of Sterling and Wilson. Net profit has also, the company has logged in a net profit of 2 crores versus a loss of 421 crores this time last year. Stellar set of numbers coming in from Sterling and Wilson as well. Also, Industries revenue is down 6.5% on a year-on-year basis. Net profit is no profit when it comes to this company's earnings as of now, because that has their loss has reduced from 237 crores to 215 crores when it comes to quarter's performance. Let's also take a look at some other stocks when it comes to what will be buzzing today. Persistent Systems, their profitability has gone up 10% on a sequential basis and 25% on a year-on-year basis, roughly in line with what the street was penciling in. And lastly, we're just getting word Zydus has also announced the launch of a new drug coming in this morning, and this drug is to cure a problem with the bladder, and this comes in shortly after Lupin has released this drug, and its name is Mirabrigron extended release tablets, and they've gone ahead and launched this in the US. So while all of these stocks will be the ones to watch out for in today's trading session.
Well, absolutely. We'll keep an eye on all of these counters in today's trading session as well. ET Now and India's oldest stock exchange, the Bombay Stock Exchange, celebrated BSE Day on April 19th, showcasing the legacy and the future of the stock exchange. Listen in to what industry veterans and experts have to say on India's growth story.
Finance will be the backbone of the growth in the economy, in my view, and obviously HDFC Bank will be a very big participant in that.
5 years down the lane, I would like to see a major development in terms of corporate bonds, government bonds, derivatives products associated with them. There has to be a proper interest rate curve across all price points with actively traded securities across all price points.
So highly ethical companies and also, as you said, compliance-based companies, they are bound to attract more money. We are at the threshold of our growth. I've never been so bullish about next 10 years than ever before.
All right, well, let's move on from that and talk about what's happening in Asia, because these markets have continued to build onto their gains. Very interesting moves coming in from Asia. Let's start by looking at what AIX is doing. Australia is up 1% and building onto those gains that we did coming in the morning, a 70-point uptick coming in for that index as well. Next up, let's talk about an index that's doing brilliantly in this morning's trading session, and that is Hang Seng, because if you take a look at what Hang Seng is doing, Hang Seng is up more than 2%, 2.5% uptick coming in for Hang Seng as of now, a 400-point rally coming in. Remember, this is on the back of those loan prime rate numbers that we see coming from China, and they look rather positive as well. Moving on, Kospi also up with gains of more than 1%. Nikkei is doing pretty well for 0.5% uptick coming in over there as well, and Shanghai continues to be trading flat but continues with that positive bias as well. So largely this is what's happening in Asia, good moves coming in over there. But despite the soaring temperatures, Indians are unwavering in their pursuit of vacation bliss, with a penchant of cooler destinations like Kashmir, Shimla and Bhutan are topping the charts. Beach getaways to Andamans are also in vogue. Surprisingly, Bhubaneswar is emerging as a domestic origin hotspot as well. Interesting travel trends are coming across. Let's go across to my colleague Astha, who breaks down these trends for us.
Despite the looming heat waves, India remains unstoppable in their quest for vacation bliss. Indians are actively planning their vacations this summer. According to IndVentures, with a preference for cooler destinations, popular choices includes Kashmir, Shimla and Bhutan, offering respite from heat. Beach getaways like Andamans are also favoured. Interestingly, Bhubaneswar has emerged as a rising domestic origin city. Internationally, Thailand, Vietnam and Sri Lanka are trending for their tropical climates and cultural offerings. Goa, Srinagar and Mumbai are top searched destinations as well. The survey also shed lights on the emerging travel trends. Tier 2 cities like Pune and Patna are gaining traction among Indian vacationers, showcasing a desire to explore new and unexpected locations. There is a good news for the travelers, as there are no significant price hikes for air tickets. Trips from Mumbai to Srinagar cost about the same, which is approximately rupees 11,000 whether you book in April or May.
Even above last year, the numbers are showing an uptrend. So that's an interesting observation that we have. Now, other destinations that we looked at are warmer beaches. And there, at a domestic level, Andamans, and a new destination that's emerging is Bhubaneswar. And then, of course, there is the religion type of destinations, which like the new one that's emerging is Aurangabad.
Around 25,000 new rooms in emerging markets like Ayodhya, Varanasi and Deoghar, which are contributing to the demand. On the contrary, with increased demand, the price of hotels sees 7 to 15% price hike. According to Mercury Travels, the demand during May to July will increase due to Olympics in Paris, which people have already started booking the flights, and also due to the football matches, which will begin in July. To cater the all-over rise demand, several airlines have announced fleet expansions, while the government initiative to develop new airports, and airlines like Indigo and Air India have ordered more than 1,200 aircrafts.
Alright, thanks Asta for that detailed report. But with that, we're out of time on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, Snehi Shah, as well as the entire team that put this show together. Thank you so much for tuning in. But you don't go anywhere, because the market takes all of the action forward.